Welcome, traders. In this video, we're going to go over a few trades from this past week, and we're going to take a look at the new ZoneTraderPro Cumulative Delta Divergence Indicator. I'm running the latest version of the indicator, which has two minor changes to it. The first minor change is something that ZoneTraderPro has as a philosophy, and that is that things don't disappear from my charts. So here you see that we have a gray line right here, and the gray line stops at this bar, indicating that this became non-divergent at this bar. The setup for the indicator is pretty simple. We choose the reconstruct tape option, and then we choose the minimum and max filter. In this case, I'm choosing 25 for the minimum and 2000 for the maximum. And then, very important, we want to set the reset time to sometime very early in the morning. It came defaulted at 9:30, and that's not a very good time, because then we would not be able to see divergences at the beginning of the day. So I changed that to something like 2:30, and that will give us our divergences that we'll be looking at the start of the day. Because this is on a 500 tick chart, I put the price deviation value at 2.5 points, and I put the number of key points at 4. I'm unchecking the value to say show zigzag, so that I do not have a zigzag from the regular ZoneTraderPro indicator overriding something and not being able to see it. And the other second enhancement will be the delta plot under delta plots for the alert for divergence. So we would check it and uncheck it. What you're going to have to do, though, is you're going to have to place the divergence.wave file in the NinjaTrader folder. The ninja.wave file will be available on the blog with this video, so you can download it and place it in the folder. The next question you might have is, when are you going to send out the new script with these two enhancements? And the answer will be in probably about 3 to 4 weeks. The reason for 3 or 4 weeks is I have contracted with my programmer to completely rewrite the ZoneTraderPro script that you see in front of you right here. The script identifies the patterns that you see, and currently there are only 4 patterns that are being displayed out of the 7 possible. When I first created the ZoneTraderPro software, I intentionally left out the other patterns because they were high risk, and I could not develop a reasonable risk-reward scenario for my customers. An example of this is this pattern here, which is a strong trend pattern, which occurs when we trade up to this pink zone here, and then we retrace back to the minor area of support. The reason that these patterns weren't included is because the market can trade all the way down to the intermediate zone down here, and we could still have a valid trade. However, now I want these patterns exposed for other reasons, to display when there is high risk and low reward, and additionally so that traders understand that when we have a strong trend pattern that reverses from here, that is going to lead us into an exhaustion trade. So the software is being rewritten as we speak, and the programmer gave me a 3-week estimated time to completion for that. So when the new software is available, that is when I will be pushing out the update. The other reason, and also probably a more important reason to do this, is that the programmer is going to be exposing all of the patterns to Bloodhound. The current version of the software was written many years ago, before Bloodhound was available, and what I want to be able to do is I want to completely automate the process so that when we have a pattern here, we can automate that process with the order flow and basically take a lot of the pressure off the trader in making these decisions. Okay, what we're going to do now is we're going to go over 7 trading days and look at 69 trading patterns. And we're going to go kind of fast, because if you want to stop and look at a particular trade, you can pause the video and look at it more in depth. And basically what we're looking at is we're going to be looking at 69 tradable patterns. Of those 69 tradable patterns, there were 39 wins, 3 losses, and 27 patterns without any order flow or delta strength. If that occurred, those patterns were eliminated, and with a win rate of 39 and 3, that equates to a 92% win rate. So what were the rules? The rules, as you see on the chart on the right, is that there is a pattern on the 500 tick chart. There's also a pattern on the order flow chart. The delta strength is required, and it's set to equal to or greater than 75. And a win is defined as a new zigzag. A loss is defined as if we had traded through the pattern, and you will see that the losses are obvious in the 3 losses that the system took. These patterns were developed over 7 trading days from February 19th to February 27th. So one of the strengths of the ZoneTraderPro is that you're able to go back and take an idea and backtest it, because nothing on the ZoneTraderPro charts are going to disappear. And that is where ZoneTraderPro excels at. So what I did here is besides doing what I would normally do, I tested 2 other ideas. And one idea was, would I get any better results if I used a 4-range chart? And the answer was no. The win rate went down and the losses went up. So I have eliminated the idea of using a 4-range chart. One of the other things I did test, which was kind of interesting, is that I normally say that I don't want to see any high risk on a 150 tick chart. And when I looked at that, the number of losses did decrease. However, the number of wins significantly decreased. So basically, I had 2 less losses, but I had 9 less wins. So while that would, of course, significantly increase the win rate, by eliminating those 9 wins at a cost of only 2 losses, you are significantly affecting the amount of profit you're going to take in. This is only a small data sample, and it's something that you would want to test before developing a trading strategy for yourself. The other thing that you would want to test is where you're going to take profit at. The system that I'm testing just formed a new zigzag. That's basically saying that every time you make a trade, if you waited for the order flow to develop, you're generally going to get at least 2 points. And as you can see, many of these trades go beyond 2 points. So this is something that a trader would need to work at and figure out where they wanted to place a target at. So let's go ahead and start looking at our trades. The first trade here we have is a successful reversal, followed by a tick divergence trade. And you will see on the chart that I marked this as a trade that did have high risk on the 150 tick chart. We then follow this with an exhaustion pattern, and those were the 3 patterns that we had for February 19th. For February 20th, we started with a trend trade that was successful, followed by a second successful trend trade, a successful exhaustion trade, and a successful trend trade. The tick divergence remained tick divergent through here, but there had been no order flow that developed, so there was no trade. Similarly here, there was no order flow. There was no order flow here. There was no order flow here. There was no order flow here. Here we have an exhaustion pattern, which again had high risk on the smaller time frame chart that did succeed, and there was bearish divergence. And then towards the end of the day, we had a trend trade here, but as you can see, there was no order flow. We also then had a reversal trade in which there was no order flow there. And that concluded February 20th. The first trade on February 21st was a tick divergence at the open. So this trade is not valid because the $ tick symbol is not valid on the open. Followed by a successful trend trade. There was no order flow that developed here for this tick divergence pattern. The trend trade was successful, and because you're not seeing the delta strength on the order flow, I'm showing you the delta strength chart from the point and figure chart which had a negative 193 at that trade. We next had a successful exhaustion. We had a tick divergence, which also gave us a high risk on the 150 tick chart. While there was order flow here, there was no delta strength on either chart. This trade was circled as a non-trade because the pattern became non-tick divergent, making that a simple counter trend trade, although it did of course have order flow and a extremely good delta strength number. However, I'm not going to count that as a win. Here there was no order flow for this trend trade, and similarly with the previous tick divergence trade, it was non-tick divergent. Here we had a trend trade that I'm calling a loser because at this point in the trade we had both order flow and delta strength. The market traded down probably 2.5 points and then traded up and traded through the zone. So that is our first loss. We next had a successful trend trade followed by an exhaustion trade with bearish divergence. Here's an exhaustion pattern that was not a trade because there was not order flow. Here we had a successful trend trade with bearish divergence, although it was high risk on the 150 tick chart. Same with the broken reversal down here. We had high risk on the 150 tick chart, and that concluded February 21st. Here we have a trend trade that's marked as a no trade because the order flow didn't develop until we were over 6 ticks through the zone here on this trend trade. And when that happens, that is now at that point a failed trend trade, and we would be looking for a reversal pattern. A reversal pattern is exactly what we got here on the smaller 150 tick chart. So because of that, even though we did have order flow, the order flow was only a stopping ratio, and it came too late to be considered as a trade. We have an exhaustion pattern here. We have a second exhaustion pattern here, and here we had a magnificent trend trade. However, there was no order flow until you were significantly out of the range of that trade. At the low down here, we had a tick divergence exhaustion pattern that was successful. We had an exhaustion pattern at the end of the day that again was successful, and that wraps up February 22nd. For February 25th, we have a successful exhaustion trade here. There was no trend trade here because there was no order flow. On this trend trade, we've called that a loser because there was an order flow pattern along with delta strength, and we were given a warning that there was high risk on the 150 tick chart, but we're going to call that a loss. Here we have a trend long trade. Here we have a tick divergence exhaustion pattern, again showing high risk on the 150 tick chart. We have a reversal pattern. We have a trend trade here, which was high risk on the 150 tick chart. Tick divergence exhaustion pattern here. Again, high risk on the 150 tick chart. We had a reversal pattern here, but no order flow. We had a trend trade here, successful, with bearish divergence, followed by a second trend trade here, again with bearish divergence, and that concludes February 25th. For February 26th, we opened the day with the trend trade. However, there was no order flow here. We had an exhaustion pattern here. There was no trend trade here because there was no order flow. And then we had a very successful reversal pattern. There was no trend trade here because there was no order flow. We had a successful exhaustion pattern here. We had no order flow on the first bar, and we had order flow on this bar. However, because it was not at the apex low, I did not call that trade a win. We had a successful trend trade here, followed by a reversal pattern that did not have any order flow. And then to close out the day, there were two very good trades. First, a tick divergence exhaustion at this high here with bearish divergence, followed by a trend trade here, which closed out the day with something like a 10-point win. and that concluded February 26th. February 27th opened with a exhaustion pattern, followed by a short trend trade. Down here we had an exhaustion pattern, but we did not have order flow at the apex low, so that was disregarded. Here we had a trend trade, again with no order flow. Here we had a trend trade, successful. Again, a long trend trade. An excellent trend trade here with a delta strength of 620 and the delta strength ball being black, meaning that that was on extremely high volume. And just as a trading tip, that would be a clue to you that this trade could possibly be a bigger winner than you would normally expect because of that high volume. This trade would have been tick divergence for this entire time from a price of 27.86 and a quarter all the way up to the high at 27.95. Because the trade was tick divergent here, I called this a loss, and it was giving us high risk on the 150 tick chart. And here's that order flow pattern for that loss. And because we're already taking as a loss back there, I circled it in black here, saying that we're disregarding it. Here we have an exhaustion pattern with an excellent delta strength number. Again, a trend trade, and that took us to the end of the trading day, so this tick divergence trade, while successful, was disregarded. Okay, here's the reason I made today's video. It's not to say that ZoneTraderPro is the greatest software program out there. We already know that. The reason that I made the video is to illustrate what you can do when you have a trading plan and you stick to that trading plan. The most common problem that I see are traders taking trades that are outside of these parameters, in other words, doing things that are high risk. The second reason for this video is to demonstrate what will be coming with the ZoneTraderPro update in approximately 3 to 4 weeks, when both of these charts can work together. So the way it would work is this: with SharkIndicators Bloodhound on both charts, you can see that Bloodhound has been applied to the order flow chart and is giving us a trading short signal where the tick divergence exhaustion pattern is over here. The SharkIndicators Bloodhound signal would then also give us a trading signal here, a short trading signal, thus giving us permission for the trade. With the two charts giving you a short signal, that information is then given to the SharkIndicators Blackbird strategy, and that strategy then executes a trade. What you could do is have the chart trader on one of these charts as it's displayed here to set your target if you didn't want to develop an automated strategy for that target. The Blackbird strategy will place a stop and place an initial target or any other rules that you may develop for that trade. One difference between NinjaTrader 7 and NinjaTrader 8 is that you can have the chart trader active while an active strategy is also on that chart. I'd like to thank you for watching this video, and if you should have any questions, be sure to give me a call.